Good morning, Barita shareholders. Barita Investments Limited's annual general meeting is now called to order. Madam Secretary, do we have a quorum?
Good morning, Barita shareholders. All protocols observed. Mr. Chairman, we have a quorum.
The Secretary has confirmed that we have a quorum and the meeting is therefore properly constituted. Good morning again, everyone. I am Mark Miles, and it is my pleasure as Chairman of the Board of Directors of Barita Investments Limited to extend a warm and heartfelt welcome to each and every one of you. I am delighted to note that through the e-platform we are utilizing today, you, our esteemed shareholders, can actively participate in this AGM. You will have the opportunity to view the proceedings, cast your votes on resolutions, and contribute through your comments and questions. For a seamless experience, please refer to the instructions provided in the Shareholders Advisory Notice, which was uploaded to Barita's website and the Jamaica Stock Exchange's website last week. Please note that registration for access to the AGM will remain open throughout the meeting, allowing individuals to join at any time. Now let's discuss the voting process. During the business section of the AGM, where there will be voting on the resolutions, the Secretary will read out each resolution and shareholders will be asked to propose and second the motion for each resolution. Once a resolution has been moved, shareholders will be given 2 minutes to cast their votes. Once the voting period closes, I will announce the results. To ensure the meeting proceeds in an orderly manner, please be reminded that shareholders and attendees' microphones will be muted for the duration of the meeting. Verbal communication will not be possible except during the question and answer segment. Shareholders who wish to ask their questions during this segment will be allowed to do so. For all other questions and comments, please use the Q&A icon located at the right of the e-platform stream in accordance with the instructions provided in the Shareholders Advisory Notice. Kindly include your name with your questions or comments. It is important to note that we have allocated 20 minutes to address any questions that you may have after the overview of the company's financials and presentation of the auditor's report. To ensure fairness and allow as many shareholders as possible the opportunity to participate, we kindly request that shareholders submit no more than 2 questions. For shareholders opting to ask their questions verbally, please state your names and ensure your cameras are turned on. Finally, if any shareholders encounter technical difficulties or have questions or comments regarding the proceedings, we kindly ask that you utilize the help icon feature, which can be found on the left menu. A chat box will appear for you to enter your query or state the problem encountered. A member of the technical team will be monitoring and will be ready to assist. Thank you for your cooperation, and we look forward to a productive and engaging AGM. We will start the formal proceedings with a prayer, and I ask Mrs. Sanya McHugh to lead us in prayer.
Let us pray. Lord, we thank you for this morning. We thank you for all who are gathered here, those who are in person and those who are online. As we're about to start, Lord, we ask that you take full and complete control of everything that is to be said and done. Let it all be done well. In Jesus' name,
Amen. Thank you, Sanya. This brings us now to the notice of the meeting. All shareholders are deemed to have received good notice of this meeting, given that the annual report and notice of AGM were first published online on May 3rd, 2024. And there have since been notices in the media alerting persons to the fact of the publication of the annual report and notice of AGM and the manner of their distribution to shareholders. I therefore now ask a shareholder to propose and another to second the following resolution.
That the notice convening the meeting, having been previously circulated, be taken as read.
May I have a proposal? Thank you, Melinda. Wallace? A seconder? Thank you, Dane Rodber. Thank you. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. The result of the poll is now on screen, and the shareholders have voted in favor of the resolution. I declare the motion carried. Madam Secretary, are there any apologies?
Mr. Chairman, we have apologies from one of our directors, Mr. Duncan Stewart, who is unable to attend today's meeting.
Thank you. Please be advised that we have received one valid proxy for this AGM. Given that the meeting is being held virtually, the proxy register is not available for viewing. However, shareholders may view the proxy register at a later date by making arrangements with our registrar, the JCSD. At this time, please allow me to introduce you to the distinguished individuals seated at the head table, starting with Stephen Philibert, the Cornerstone executive entrusted with responsibility for overseeing group finance; Ramon Small Ferguson, Chief Executive Officer, Barita Investments Limited, and Managing Director, Barita Unit Trust Management Company Limited; and Stephanie Sterling, Senior Legal Counsel and Company Secretary. Their collective expertise and leadership have contributed significantly to the company's success. It now gives me great pleasure to introduce the members of the Board of Directors of Barita Investments Limited. As previously mentioned, I am Mark Myers, the Chairman. Joining me on the board are a group of highly accomplished individuals, each bringing a wealth of diverse expertise and valuable insights to the organization's strategic decision-making process. Together, we form a cohesive team dedicated to steering Barita Investments Limited towards continued success and growth. The other directors are Paul Simpson, Deputy Chairman; Carl Domville, Chairman of the Audit Committee; Duncan Stewart, Chairman of the Board Investment Committee; James Godfrey, Director; Philip Lee, Director; Robert Drummond, Director, Jason Chambers, Director and Managing Director of BUTM, Michael Hilton, KC. Mr. Hilton retired from the board effective June 30th, former director. Peter Golston, Chairman of the Corporate Governance and Conduct Review Committee. Mr. Golston was appointed to the board effective May 1st, 2024. Melinda Wallace. Ms. Wallace resigned as Company Secretary effective March 28th, 2024. And Stephanie Sterling. Ms. Sterling was appointed Company Secretary effective March 29th, 2024. I would now like to acknowledge the presence of the following persons. Our auditors, BDO Chartered Accountants, represented by Ms. Donna Hobson, a partner of the firm. Our registrar, Jamaica Central Securities Depository, represented by Giovanni Lynch and Chantel Scarlett Dennis, who have joined us in person. We now turn our attention to the management overview and reporting. Ladies and gentlemen, while COVID-19 may now be considered ancient history, its legacy of higher inflation rates globally is persistent. The Bank of Jamaica and other global central banks maintained a tight monetary policy during the financial year 22-23 to combat the elevated price levels. The BOJ's policy rate peaked at 7%, which represented a cumulative increase of 650 basis points from a low rate of 0.5% in September 2020 to 7% in October 2023. By any measure, that was one of the sharpest policy rate increases on record. As a consequence of the sharply higher interest rate environment, our net interest income saw a soft outturn. But importantly too, given that the BOJ's policy rate is the reference rate in the local economy, then effectively that meant the cost of capital for the local productive sector or users of capital also rose sharply. It followed as a consequence, industry-wide, that it was challenging to originate deals given corporate entities having largely decided to postpone their major capital raises for a future period when market conditions might be more favorable. Consistent with our history of prudent and proactive decision-making, Barita was able to return a commendable performance for the financial year, which was helped in great part by the contribution from our alternative investment portfolio. Even as the business navigates the near-term headwinds, we are also still very much vigilant in maintaining a focus on prudent capital management and allocation. Again, our capital adequacy ratio ended the financial year at an impressive 28.4%, which is more than 2 times the FSC's early warning level. Concurrent with our capital management focus, we also continued investments of time and capital resources towards building out the future growth of the group, critical elements of which we know will be materially advanced by the end of 24-25. Mr. Ramon Small Ferguson, our new CEO, will provide further details about those strategic initiatives, as well as further details and insights into our financial performance. Following Mr. Small Ferguson's presentation, we will hear from Mr. Stephen Philibert, who will guide us on the financial performance of the company. Together, their insights will provide a holistic understanding of our organization's current standing and future endeavors. Mr. Small Ferguson.
Thank you very much, Chairman. It's my pleasure to be sitting here today to address you, my fellow shareholders, regarding the business of our company. Right. As the Chairman mentioned, 2023 was a challenging year for our business, but I think what was very apparent from our outturn in 2023 was the resilience that our business was infused with over the course of the previous years, particularly what we have described as the post-acquisition period, where the business has benefited from the stewardship of the Cornerstone Group. In 2023 actually marked, as is on screen, the 5th full financial year post the acquisition of Barita by Cornerstone. And we have stylized our 2023 year as being the culmination of 5 years of Cornerstone, and 2023 being a year of resilience and continued growth. Right? So let's move ahead to the prepared presentation. I wanted to start out the presentation by reminding you, our shareholders, of our mission as a business, right? And that mission is staying ahead and growing wealth. Intuitively, in that mission is a quest for innovation and a continued quest for growth for not only the business, but our key stakeholders, being our customers, our shareholders, and everyone who collaborates to make things happen for Barita. Our vision states that we will revolutionize your relationship with money. And again, that is our primary objective for all our stakeholders. Again, our customers, and ultimately you, our shareholders. I want to remind you of our current corporate structure as an entity, right? And what's on screen here really looks across the entire Cornerstone Group. Right? So at the top of the structure are the Cornerstone shareholders, and there are two entities, Cornerstone Financial Holdings Limited, the entity most relevant to Barita Investments Limited. That company owns just around 75% of Barita. Barita, in turn, owns 100% of Barita Unit Trust Management Company Limited, which is the asset management arm of our group. Cornerstone Financial Holdings Limited also owns CFHL USA, an entity incorporated in the United States with a focus on real assets and infrastructure. On the other side of our group is Cornerstone United Holdings Jamaica Limited, a Jamaican entity, and that entity is the 100% shareholder of Barita's sister company, Cornerstone Trust and Merchant Bank, a regulated banking and deposit-taking institution here, Merchant Bank. CUHJ also owns CUH USA, another entity incorporated in the US with a focus on the development and deployment of financial technologies. And that in substance is our group. Now, what I have on screen here is what is expected to be our future corporate structure, right? And the reorganization that will occasion this structure is within the context of the financial holding company project that we are undertaking, right? This would see, per what's on screen, Barita and Cornerstone Trust and Merchant Bank migrating to being owned by one entity, right, which is the financial holding group, right? And complementing those two entities, or that entity rather, would be the two US entities, which would be held directly rather by the Cornerstone Group. Moving ahead, I'd like to introduce or reintroduce in some instances you, our shareholders, to the management team who has charge with the stewardship of the business, right? And what's on screen here is the management team would have been in place at the time of the financial year 2023 period. You see on screen here Dane Broadwell, who would have served as interim CEO for, I believe, the entirety of that financial year. And Dane has moved on to become the designate CEO for the financial holding company and is presently the interim CEO of our sister company, CTMB. I'm also there. At that time, I was deputy CEO and managing director of Barita Unit Trust Management Company. Mr. Jeffrey Romans, who is our senior vice president for risk management, is last on screen. Ms. Sarah Henriquez, Sarah Young Henriquez is our VP for operations. Ms. Therese Kettle leads our investment banking business as Senior Vice President. Ms. Anne-Marie Walker-Cato is our VP Finance. Mr. Percival Hurdit was Head of Financial Risk. Mrs. Sonia Owens is Head of Treasury and Financial Institutions. Mr. Ian Anderson heads up our Information Technology function. Mr. Dave Dixon, SVP Sales and Service, and Ms. Sansia Thompson leads our Wealth and Corporate Solutions business as VP. I want to also mention members of the Cornerstone management team from whom we receive significant support. Cornerstone is headed by our Deputy Chairman, Mr. Paul Simpson, who is the founder, president, and CEO of Cornerstone. Mr. Jason Chambers, who also serves as a director on our board, is the Chief Investment Officer of Cornerstone. Mr. Gavin Jordan is the Chief Operating Officer. Mr. Dean Bradwell, our former interim CEO, is there as well. Mr. Stephen Philibert, who is to my left, is our Group Chief Financial Officer. Mrs. Stephanie Murdoch is our Chief Human Resources Officer. And Ms. Sabrina Freeman is our Chief Audit Executive at the Cornerstone level. These two teams combined have a wealth of experience, which we have deployed in the stewardship of this business to your benefit as shareholders. Right? So I want to talk a bit about the highlights of our financial year 2023 period, right? And really what I describe on as us focusing on building on our core promise to you as stakeholders, right? Now, there are a few things that we would have put in place with a view of being, one, much more communicative with respect to our interactions with our stakeholders, and two, things that we would have put in place to enhance our capability as a business to really drive value, right? The first is that we would have implemented quarterly investor briefings, which were launched with a view of sharing our ongoing investment strategy and performance with you, our shareholders, right? We would have seen a maintenance during the period of our Net Promoter Score, which is a primary indicator of customer satisfaction, and we have taken a lot of learnings from that with a view of improving even more going forward. We have expanded our online capabilities to allow for online onboarding and online KYC updates to really enhance our interactions with you as our customers. We have spoken for the last 2 years or so about the fact that we have been in the throes of implementing a new core system. And during the financial year, I'm happy to indicate that we would have hit some milestones in relation to that. And we have completed the first phase of that implementation, with phase 2 taking us through this financial year and to the beginnings or so of the next financial year. With respect to our corporate clients, we have expanded and executed on solutions. We're happy to report that we would have been able to bring the only initial public offering of 2023 to the market, which was the listing of One Great Studios. And our investment banking unit has raised well over $100 billion in capital for clients across several industries since its inception. And as I had mentioned before, we would have made significant progress throughout the year with respect to the financial holding company reorganization exercise. Another area of focus for us, which is really key to positioning for the future of the business, is our human capital. Right? Now, we would have undergone several initiatives throughout the year to really focus on building our talent portfolio, our brain trust, as we have stylized it. Right? We would have invested in technology through the core system upgrade to enhance their efficiency. We would have launched our internal education platform, our learning management system, Cornerstone University, to give our team access to over 300 courses, right, to enhance their development. We would have put together an individual development plan which was rolled out to add personalized objectives to each employee's career development. We've developed our centralized internal communications hub to keep the team on the same page. And as a complement to our analyst program, we have also developed a financial modeler program, which is intended to really focus on bringing and honing analytical talent and really, sussing out problem solvers who we believe are core to the kind of talent pool that will drive the business forward. Now, just to speak a bit about the capacity of the business, right? And, in the early part of the post-acquisition period, the team spent a lot of time on capacity building. That capacity building was focused, I would say, on three main areas. The first is enhancing the financial endowments of the business, which the ratios on the screen, I think, most aptly evidence. Our shareholders' equity has grown in exponents post-acquisition, largely due to deliberate fundraising efforts, 4 public fundraising efforts, 2 rights issues, and 2 additional public offerings. And that shareholders' equity has grown from just over $3 billion post the acquisition to $35.4 billion at the end of the financial year. Our leverage ratio, again, continues to evidence significant capacity. It ended the year at 3.6 times, which is much less than the industry average, which hovers at any point in time at around 6 times. And our capital adequacy ratio, as was highlighted by our chairman, ended the year at over 2 times the early warning level of 14% of the FSC, and almost 3 times the actual statutory requirement of 10%. This leaves us with a business that has the capacity to grow, has a stable funding base by virtue of the larger infusion of shareholders' equity relative to some of our peers, and importantly, has the capacity to withstand shocks, which we all know are very, very unexpected and very numerous in the current operating environment. The second area of capacity building that we would have pursued really was evidenced by a couple of previous slides, which is the infusion of human capital into the business to really bring the necessary talent and ingenuity to make this financial and these financial endowments that the business have essentially to put them to good work. And the third area that we have focused very heavily on is really socializing our brand with our stakeholders, and we've done a lot of work there, again, with the objective of enhancing the capacity of the business. I want to talk a bit about our resilience. Right? Now, there are a few areas that really exemplify that, and the capital base is one. But we have complemented our strong endowments on that side, the high capital ratio, which remains high in the present day, 27.4% as at March 2024. Significant excess regulatory capital. We have $22 billion in excess capital relative to what would be required by the regulator. I mean, our very strong levels of liquidity, just over $39 billion in high-quality liquid assets, and the fact that well over a quarter of our funding comes from equity or core equity. Right? That has been complemented by really what I'd describe as a very robust governance and risk management framework. Right? We have spent just as much time on that as we have on raising money and fortifying the business from a financial perspective. Right? Specifically, we really overhauled our enterprise risk management framework, and a combination of Ernst & Young, who would have been brought in as consultants, and Dane, in his capacity as Chief Risk Officer when he joined our group, really completed that exercise that developed a fit-for-purpose enterprise risk management framework to complement the very strong financial endowments that the business has. We would have also overhauled our internal policies and procedures, an exercise which was led by KPMG. We focused again on building out our talent portfolio, not only at the front of the business, in the front office, but also in the second and third lines of defense, recruiting key executives in the areas of risk management, operations, audit, to really ensure that the business, as it grew in terms of the capacity to do business development, also grew with respect to its capacity from a risk management perspective. We have invested heavily in technology overhauls, which not only give the business capacity to scale, but also act as risk mitigants as well. And finally, we have sought to institutionalize independence through internal audits executed by EY and our internal audit team on the oversight of the board and its subcommittees, right, which are independent. It would be remiss of me not to talk a bit about our foundation, right? As a key part of our post-acquisition strategy, I'd say that we have overhauled and significantly expanded the scope of activity and the capacity of our foundation, and that's something that we are very proud of, right? Under the stewardship of our executive director, Tankita Chance Wilson, we have been able to reach many stakeholders through our various areas of focus. Education, which was the pillar of our foundation when it was started, continues to be core to our activities, right? And we would have executed several initiatives along that line throughout the year. We have also taken deep interest in really impacting positively the areas of entrepreneurship as one central area of expansion as well, in our renewed focus on the foundation. I want to close out the discussion by talking a bit about the growth in the business and where we have been focusing our attention on delivering long-term shareholder value. Right? Now, just looking at how things have gone historically, and I'll give this a light touch because Stephen will get into the details. Post-acquisition, we have experienced significant growth in nominal earnings per share, naturally with a combination of a slowing in profits in recent financial years and issuance of additional shares through capital raising initiatives that I mentioned before. We have seen some curtailment in EPS growth since the 2021 financial year, but the nominal earnings per share position as at 2023 of $2.85 is multiples of the pre-acquisition position of around 83 cents in financial year 2018, still evidencing the creation of significant value in the post-acquisition period. I would have mentioned the capital to risk-weighted asset ratio as well, which has fluctuated over time. The peak of that ratio was really at the point in time when we completed our last fundraise exercise, being our additional public offering in 2021. And what we have seen since then is the business utilizing the risk capacity created by that fundraise while still maintaining capital adequacy levels well above what would be prudent and what is required from a regulatory perspective. Again, ending the year at more than twice the early warning level from a regulatory perspective. Funds under management has grown materially in the post-acquisition period. We would have started at the point of acquisition at around 70 billion Jamaican dollars, and up to the end of financial year 2023, we would have seen that number grow to over 360 billion Jamaican dollars, again evidencing significant business development during the period. Let me talk a bit about the economic landscape to really give context to the 2023 performance, right? And 2023 was characterized by a few major themes. One was the fact that we would have seen signs of slowing GDP growth during the period. Now, inflation, which started the period at a very elevated level, would have been subdued during the period, despite remaining elevated up to the end of the period, both locally and in key international markets, right? Now, towards the end of the year, we would have seen inflation retreat to within our target range, right? But monetary policy still remains tight, both locally and globally, right? Now, our outlook with respect to the state of play is for some easing, albeit not at a pace that would, I'd say, reverse the impact that we would have seen to date, but at a pace that would really reflect cautious optimism with respect to the state of the underlying economy. Risks remain, right, both globally and locally, but what we would have seen for Q1 of 2023 is GDP growth in the US being down, despite remaining at a reasonably healthy level of 1.4% for that quarter. Now, to talk a bit about the path forward, global growth is projected at 3.2% in 2024 by the IMF, right? And that has been revised up by 0.1% in April of this year relative to January's projections, right? And that's a positive. It means that things are evolving in terms of projections in the right direction, right? Inflation really remains somewhat elevated despite moderating to 3.3% in the United States based on the latest release, while inflation in Jamaica has fallen further within the target range of 4 to 6% to 5.2%. Finally, interest rates remain elevated in the US. 3-month Treasury bill is range bound at around 5%, right? While the 3-month Treasury bill in Jamaica stands at around 8.23%. The policy rate remains unchanged at 7%, as was mentioned by the chairman. What has this meant for our investment strategy, right? So during the 2023 financial year, as we had guided in our various quarterly meetings, our investment strategy was really characterized by a few main pillars, right? The operating environment and by extension the financial markets remained at that point in time heavily influenced by monetary policy. High interest rates, low liquidity, and that was the order of the day, right? The global outturn had been trending, I'd say, above the market consensus, and consequently, at least from an inflation perspective, and consequently, the risk outlook was increasingly neutral throughout the year, right? And consequent to that fact, with the risk outlook still being elevated above where we would have desired, despite trending to a neutral point, our investment strategy for the year was focused on liquidity. So we'd have maintained an overweight position in liquid assets, remaining tactically flexible to take advantage of opportunities. I mean, we've really described that strategy as being well poised to take advantage of market neutral opportunities. So in other words, if the market were to go left, right, directionally, or there were to be movements in one asset class versus the other, having liquidity on hand left us in a good position to take advantage of those opportunities as they presented. We would have also focused heavily on our alternative investment strategy, specifically the real estate strategy, which is well noted and discussed, our private credit strategy, our private equity strategy, and we would have done some work on the beginnings of our infrastructure-focused strategy as well. Now, our focus on alternative investments would have benefited us throughout the year, and it's really been informed by a few factors, right? The first is that it represents an inflation hedge, right? And we would have put together, particularly the real estate and private credit-related strategies, well before we started to see an elevated inflation picture, and that has served us well. We have seen the inflation hedge benefits. There is also the diversification benefit, right? Our business is built on traditional assets, stocks and bonds, right? We're a traditional investment bank. So the complement that alternative assets has brought to us has really shone through, particularly during the 2023 financial year. Alternative assets typically also deliver superior risk-adjusted returns. Of course, if asset selection is done well, right? And what that means is you typically get a better return picture per unit of risk. Right? There's greater ability as well, or greater stability rather in value of these investments during volatile markets. And finally, it gives you the opportunity to be bespoke. The structures are flexible and therefore from a funding perspective, we're usually able to put forward fit for purpose structures in place. With respect to real estate, right? We would have mentioned in several of our discussions MGR Real Estate Holdings Limited, right? And this is really the vehicle through which Barita has access to and manages over 2,000 acres of attractive real estate, which the company will be developing over the course of the next several financial years. Some of the development plans will really center around the applications of these different parcels of real estate. Right? There are real estate opportunities for hotel residential developments, multifamily residential developments, commercial developments. There are warehousing and other light industrial solutions that could come from this portfolio. Now, having gone through what we have described as an acquisition phase with respect to the real estate strategy where these assets were acquired, we're now on the cusp of a very active and involved development phase where we will see these assets being monetized and realized through realizing the development plans associated with them. Right? From a private credit perspective, during the 2023 financial year, our investment banking unit would have originated and funded over $12 billion in private credit opportunities, right? And that would have contributed in part to the growth that we would have seen in our on-book loan portfolio as we have participated in some of these structures, right? Now, we continue to build our capacity and position in this area, right? For a few reasons. One, we want to be the port of call for flexible financing in the investment banking arena. And two, we have seen the benefits, the potential alpha that can be generated, particularly with the creative exit opportunities that private credit strategies bring to the table. The third reason is that we believe, on the cusp of bringing a private credit fund type opportunity to our investors, which will give them access to the strategy. So we do need to have the inventory of opportunities to put that forward. Right? I have mentioned before, and I won't belabor this point, our strength of capital, which really is evidenced by primarily by our capital to risk-weighted asset ratio. And again, this is a pillar of our strategy. It gives us the flexibility and capacity that we need in order to be nimble and take advantage of opportunities. So let me close out by talking a bit about the future. Right, and we are well into our 2024 year, but really we have focused our attention during this year and will in the new financial year on a few things. The first is elevating our level of engagement and empowerment internally with a view of making Barita employer of choice. Right? We have also focused very heavily on how we can elevate our client experiences, right? Really moving towards a more frictionless kind of client interaction, right? We're also really feeding the the spirit of ideation and innovation internally through our various programs involving our team. Right? And we are really now, having been through 5, almost 6 years of our post-acquisition period, we're now focusing very heavily on optimizing our business, right, from the perspective of business mix and revenue lines. We're in the throes of our technological transformation, which I mentioned before, and as we move closer to achieving the reorganization under the financial holding company structure, we expect to see efficiencies coming from what we've described as our one group structure. Finally, governance and risk management remains important to us, and we want to really see some maturity in these areas of our business, or further maturity through simplifying and streamlining our governance processes and really continuing to support the robust risk management framework that we have in place. Here we go. So, in closing, what's our ethos? Right? We believe our business can be described as where talent meets intensity. Right? And Dane would have spoken about this, I think, last year. We're unapologetic about challenging the status quo. That's really what we are as Barita and as a group, right? And we want to define the future of financial services. We are approaching our strategic imperatives fiercely, right? And we want to be the face of financial and investment education, right? And our strategic imperatives will all culminate, I think, around these 3 facts, right? And with that, I think I'm at the point where I'll be handing over to Stephen to take you through the financial performance for last financial year. Stephen.
Thank you very much, Ramon. Good morning to our shareholders and visitors. It's my pleasure to take you through our financial performance for the year ended September 2023. On our opening slide, you'll note we have a subheading there, resilient profitability in a difficult economic context. So to what does that refer? Well, as both Chairman and Ramon have mentioned, it refers primarily to the sharp increase in interest rates that we've seen both here in Jamaica as well as globally, and the impact that has had on our business, not just us, but the industry, broadly speaking. So what's the effect of those on our financials? But as interest rates increases, there's a strong tendency for repricing to take place more quickly on your liabilities as opposed to on your assets. And what that means is that while both your gross interest income and your interest expense go up, the interest expense tends to go up more quickly. And that has the effect of suppressing or being adverse to your net interest income. So that net interest income is what comes into your revenue line, which you're seeing there in the table as just growing slightly by 2% to 9.1 billion from 9 billion flat in the prior year. It also then flows through to your bottom line and has that effect of the decline that you're seeing, 19% year over year to 3.4 billion from 4.2. So in fact, the effect on net interest income is significantly more than that 19% would suggest. What this is saying really is that we've been able to moderate the effect of those interest rate increases on the bottom line of the business by diversifying ourselves into the alternative investments that Ramon took quite a while walking us through. So we've been very successful in that strategy, and it has been timely for us. In the meantime, the rest of the business has been growing. We see the total investments has gone up 23% year over year to 106 billion from just under 86 billion in the prior year. That drove total assets to 128 billion, up about 17% from just under 110 in 2022. Total equity has increased by about 10% to 35 billion from 32.2. And ROE is marginally down, of course, in line with the effect that I spoke to earlier on net profit. Looking at some more detail on the revenue lines, you can see while the numbers are very small, the bottom bar of each of those columns, which is colored in black, represents a net interest income. So you can see that from 2019 through 2020, 21 and 22, that was consistently growing. And then in 2023, you see the effect of what I just described on our net interest income. So we've been able to mitigate against that with growth in other areas. You'll see the fees and commission income in 2023 was 3.4 billion relative to 3.0 in the prior year. So that's a fairly robust performance. Right above that, in the darker gray, is our FX gains, and that declined from just under 800 million to about 600 million. That is a line item that is driven by market conditions. Where there are opportunities, we try to remain flexible to take advantage of them, but it's not something that we rely on as core. And then finally, we have the fair value and realized gains on investments, and that also had a good outturn for 2023, sitting at just under 4.4 billion relative to just under 3.4 in the prior year. So we're able to compensate at the revenue level for the fall off in the net interest income through the performances in the fees and commissions and fair value gains line items. Turning to operating expenses, we see that the blue section of the columns, which represents the staff cost, which is the biggest single line item in expenses, was relatively flat, 1.7 billion in both years, 2022 and 2023. Where we're seeing some increase reflected is in the administration expenses, moving from 2.1 billion to just under 2.9. So what's happening there? Well, it's what we've spoken to fairly consistently, the expenses that we've undergone trying to build our core capacity. It has a lot to do with improving our systems, our technology, and putting us in a good position to scale our business very efficiently. So those expenses also were in 2022, but were partly offset in that year by some forbearance on management fees that took place as the Cornerstone group foresaw the economic conditions that were worsening and decided to take a wait-and-see approach and, just to be conservative around those. Without that effect in the current year, you then see the full effect of those investments that we're making in our capacity. We don't expect that those will be permanent parts of the cost structure. They're transitory in nature. Once the projects that we have underway now are concluded, we'll see those fall away and replaced instead by the greater efficiency that the newer systems and greater capabilities will provide us. We also have on this chart the efficiency ratio, which is a good way to think about the expenses in relation to our revenues. It's difficult to see, but it's that gray line. So it's moving from 38% in 2019 to 40 in 2020, 38 again in 2021, and 43 in 2022. So what that is saying is that the business, in a core sense, has an efficiency ratio in or around 40% range. And it is that investment that I spoke to earlier that is taking us up temporarily to the higher range at 51% in 2023. And we anticipate seeing fall off in that as those projects come to an end. On this chart, we look at the net profit performance over the full 5 years. We see consistent growth. We had consistent years of record profitability all the way through last year, 2022, And then we've already discussed the decline in 2023 and the reasons for that. We also see there the net profit margin, which is the line graph in gray. And the story that is telling us is that during the course of the stewardship of the business by the Cornerstone Group, we've seen that net profit margin improve. It reflected in the low 40s in 2019. In fact, prior to that, it was yet low. And then it has been subsequent to that in or around that 50% range. You see it was around 53 in 2020, 50, 47, etc. Because of the impact on expenses mentioned prior, we see the temporary decline to about 38% in 2023. So we expect that also to rebound. Finally, we have here some highlights from the balance sheet and some other key data points. I'd spoken to the increase in total assets and total investments year over year. But here now you can see what the trend has been over the 5-year period. So it's reflecting quite significant increases across that period in both. We also see the increase in that portion of our funding base that comes from repo liabilities from 24 billion to 76. So that's in accordance with the growth of the asset side. And Ramon spent a fair amount of time walking you through the change in our shareholders' equity and what that means for the business strategically in terms of the ability that it provides us to be prepared for any opportunities that may arise and to withstand any shocks that may come in the environment. And we also see there what the movement has been over time in the earnings per share and share price. So with that, I'll spend just a little time on the 6 months ended March 31st, 2024. So again, we have this theme of resilience, which flows through. We are still in that situation where the net interest income is being suppressed by the impact of the higher interest rates. So you'll see that reflecting in the income in 2024 for the 6-month period at 5 billion flat versus 5.5 in the prior year. Cost to income ratio, again, is elevated relative to prior year, not to as great an extent as you saw with the full year 2023 over 2022. So that differential, as I've mentioned, you'll start to see taper off. Net profit for the 6-month period, 1.9 billion relative to 2.6 billion in prior year. That's a decline of about 26% and is for the reasons aforementioned during the review of the full 2023 year. Total assets continue to grow up to 134 billion from 120. That's about 12% up. Total equity has been roughly flat, sitting at, well, it rounds to 36 billion in each case. And the ROE, again, reflecting that decline in net profit, is sitting at 11% relative to 15. This chart just reiterates the specific net profit figures and also, again, has that line graph that reflects the net profit margin figure and the decline in it temporarily for the reasons that I've gone through before. So that brings us to the conclusion of the slides that we had for you today, and I'll hand over to the chairman.
Thank you very much, Ramon and Stephen. I will now ask the representative of BDO Chartered Accountants, our auditors, Ms. Donna Hobson, to present the report of the auditors. Ms. Hobson?
Thank you, Chairman. Good morning, everyone. Barita Investments Limited. Report on the audit of the financial statements. Opinion. We have audited the consolidated financial statements of Barita Investments Limited and its subsidiary, and the financial statements of Barita Investments Limited standing alone, the company, set out on pages 138 to 231.
which comprise the groups and the company's statement of financial position as at 30 September 2023, and the groups and the company's statements of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and the company as at 30 September 2023, and of the groups and the company's financial performance and cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRSs, and the requirements of the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with international standards on auditing ISOs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We are independent of the group and the company in accordance with the International Ethics Standards Board for Accountants International Code of Ethics for Professional Accountants, including International Independent Standards, ISBA Code, and we have fulfilled our other ethical requirements in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Expected credit losses in relation to financial assets. See notes 3F, 4B, 5, and 5A to the financial statements for management's related policies and disclosures. The determination of expected credit losses, ECL, on financial assets is highly subjective and requires management to make significant judgment and estimates involving the application of a forward-looking ECL impairment model, which takes into account reasonable and supportable forward-looking information and will result in the earlier recognition of impairment provisions. These estimates involve increased judgment as a result of the economic impact of COVID-19 on the group's financial assets. The most significant impact of the implementation of the impairment model is to the provisioning policy for the group's investment securities. The group makes judgments regarding the recoverability of investment securities, making certain assumptions and judgments in arriving at the provision for impairment. The group estimates ECL on debt securities using a transition matrix based on historical default rates for each rating grade apart from AAA. Debt securities were placed in categories based on the class and ratings, and loss given default arrived at using the historical recovery rates based on government and corporate defaults. How our audit addressed the key audit matter. The group's accounting policy as it relates to the impairment provisioning for debt securities was obtained, and the reasonableness of the impairment provision assessed in relation to the requirements of the standard. We established an understanding of management's ECL model, including source data, the effectiveness of the implementation, and the mathematical accuracy of the model. We tested the reliability of the source data used in the design of the model by confirming a sample to the public historical data. We evaluated the appropriateness of management's assumptions and judgment in arriving at the loss given default percentage by assessing the factors used in establishing the weighting assigned by management. The main macro factors used were compared to external public information and calculations tested through recomputation. We determined whether the default risk percentage was accurately calculated and correctly applied to the relevant grade of each debt security. We assessed the adequacy of the disclosures of the key assumptions and judgments, as well as the details of the transition adjustment for compliance with IFRS 9. Based on the audit procedures performed, no adjustments to the financial statements were deemed necessary. Valuation of investments classified at fair value. See notes 3F, 4B5, and 15 to the financial statements for management's related policies and disclosures. 1.4% of the group's investment securities measured at fair value are instruments for which quoted prices are not available and for which one or more of the significant inputs are not based on observable market data. The valuation of these investments requires significant estimation. Management uses valuation techniques which involve unobservable inputs. Investments for which observable market data was limited were classified as level 3 and valued at $1.57 billion for the group and the company. These investments relate to investments in unquoted equities. Management has determined the fair value of these investments using the income approach and the discounted cash flow method, which involves evaluation of the underlying assets of a business based on historical and future projected cash flows. How our audit addressed the key audit matter. We assess the design and operating effectiveness of the group's controls over the determination and computation of fair values. We assess the reasonableness of significant assumptions used by a management expert. We involved our valuation specialists to assess the method used by management to determine fair value, whether it was appropriate based on the information available. We assess the adequacy of the disclosures, including the degree of estimation involved in determining fair value and sensitivities to changes in key assumptions. Based on the audit procedures performed, no adjustments to the financial statements were deemed necessary. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for preparation of financial statements that give a true and fair view in accordance with IFRS and the requirements of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the group's and the company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern and using the going concern basis of accounting unless management either intends to liquidate the group and the company or to cease operations or has no realistic alternative but to do so. The board of directors is responsible for overseeing the group's and the company's financial reporting process. Other information. Management is responsible for the other information. The other information comprises the information included in the annual report but does not include the consolidated and standalone financial statements and or auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the consolidated and standalone financial statements do not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements or our knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there's a material misstatement therein, we are required to communicate the matter to those charged with governance. Auditors' responsibilities for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISOs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with ISOs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal controls relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group and the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or, if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group and the company to cease to continue as a going concern. Evaluate the overall presentation, structure, and content of the financial statements, including the disclosures, and whether the financial statements represent the underlying transactions and events in a manner that presents a true and fair view. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate with the board of directors regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that were identified during our audit. We also provide those charged with governance with a statement that we have complied with relevant ethical requirements regarding independence, and to communicate them all relationships and other matters that may reasonably be thought to bear on our independence and, where applicable, related safeguards. From the matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the financial statements of the current period, and therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on additional matters as required by the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the financial statements which are in agreement therewith give the information required by the Jamaican Companies Act in the manner required. The engagement partner on the audit resulting in this independent auditor's report is Balvin Van Riel. Signed, BDO Chartered Accountants, 29 December 2023. Thank you.
Thank you very much, Ms. Donna Hobson. Ladies and gentlemen, we will now move into the question and answer segment. As previously advised, we have allotted 20 minutes to address your questions, and so we ask that shareholders submit no more than 2 questions each. Madam Secretary, do we have any questions from our shareholders?
Thank you, Mr. Chairman. There are a few questions in the e-platform. We'll answer each in turn, but prior to that, I would like to remind shareholders that you may submit your questions using the question and answer icon. And for shareholders who wish to ask questions verbally, you'll be allowed to do so once you have indicated a desire to do so electronically, raising your hand using the instructions provided to shareholders in the Shareholders Advisory Notice. The first question, Mr. Chairman, is from Dashawn Hendricks. He has asked, given the state of the market currently and the fact that for the last 3 months, inflation has fallen in the 4 to 6% bandwidth, Along with the Fed forecasting fewer rate cuts this year, what is your forecast for the BOJ's action in terms of its own policy rates, and what strategies you will implement to take advantage of what you anticipate the central bank will do?
I'll probably take that one, Stephanie. So I'd probably answer it with from end to beginning with respect to our own strategies and positioning given the context of the environment, right? The fact of the matter is we have seen significant tightening both globally and locally from a monetary policy perspective, and the natural follow-on to that would reasonably be some easing. Now, what I think is challenging for, or has been challenging for most people to forecast, is timing, right, of said easing. So from our perspective, how we have viewed things, and we've kind of discussed this in a couple of our quarterly investor briefings, is that we have not hedged our strategy or positioned ourselves to entirely rely on the easing taking place. Instead, we have seen where just a slowing, or rather discontinuation of rising rates is beneficial to our business, right? Specifically, what has caused the compression in revenue from net interest income in the recent financial year, right, is really the faster repricing of liabilities relative to assets, as Stephen mentioned. So what we have seen is instead actually a slowing of the repricing of liabilities relative to assets. So there is almost a reversal, because assets are maturing and being reinvested in this higher rate environment, and liabilities are either showing stability with respect to their pricing, or actually in some cases declining, right? So we would anticipate that an environment of stability in terms of interest rates would positively benefit our net interest income line, all else being equal. Additionally, with rates not being in a consistent upsurge, there is now two-way movement in fixed income, right? And that generally would lend itself to an environment where fixed income trading would be a much more viable line or business line for a business that focuses primarily on long type exposures, right? Buying with a view of prices appreciating. So that's another area of business that would, would benefit in a more stable interest rate environment. Finally, from a capital markets perspective, I'd say the greatest enemy to business in general, but particularly with respect to fundraising, is uncertainty, right? And if you're in an uncertain environment with respect to interest rates are rising, interest rates are nominally much higher than they would have been, say, a year or a year and a half ago, there would be a slowing in capital market activity, as the chairman mentioned in his preamble. So what we're seeing, though, is somewhat of an acceptance of the current interest rate environment, and with rates being somewhat stable, we're seeing a return of capital market transactions, and businesses just recognizing that, well, we need to expand regardless, and that has helped our investment banking business. So I won't put forward an outlook timing of easing. I'd say directionality, our base case view is that we will see some easing, but I won't seek to put forward timing. Instead, to say that the business is poised to develop even in this fairly stable period from an interest rate perspective.
Thank you, Ramon. The next question is from Dashawn Hendricks. He has asked, or she has asked, also, can you give an update on your real estate strategy for places like Eden Gardens and others around the country?
Okay. Yeah, I'll take that one again. So we have been giving updates again in our quarterly investor briefing, right? And what we have said is the following. One, I believe the strategy has now transitioned squarely away from the acquisition phase, right, which it was in for the initial period, into the phase that will be characterized by development. Right? Two, the underlying inputs to those developments naturally are a few. Right? One, I'd say our market studies and gathering of information to ensure that we put forward the right kind of inventory into the market, right? Because our strategy is largely to develop for divestment, and so we aren't going to build for building's sake, right? We don't intend to occupy all these structures that we intend to facilitate the development of. So it's going to be very important for us to be guided by the state of the market with respect to both the timing and nature of the developments that we put forward. The second is that we need to have the right partners in place, and we've been working arduously on putting together the portfolio of partners that will be necessary to bring this strategy through its development phase. We are an investor primarily with respect to this real estate portfolio, right, and manager, and therefore we recognize the extent of our endowments that we will either need to build or to collaborate, with other parties to get, right, and consequently getting those right partners in place is another prerequisite to actually executing on development. I'm happy to say that the culmination of those two things has led us down a road where we are seeing a clear path with respect to development timeline for elements of the portfolio. Eden Gardens specifically was mentioned, and I believe that we have done some pre-work there that has cleared the way, no pun intended, towards us bringing forward the timeline for development there. I won't commit in this meeting to exactly when things will start, but there will be disclosures. I mean, this is an important part of our strategy, and we speak about it every chance we get. So there will be disclosures there. There are other elements of the portfolio, though, that I believe will be developed before Eden Gardens, not long before, but before. So more to come there, and as we interface with the public, there will be more disclosures around that. But we're well into the development phase, I would say.
Thank you, Ramon. This next question is from Dwight Jackson. Is Barita thinking of paying a next dividend during the course of the year?
Let me take that one, Stephanie.
Thank you, Mr. Chairman.
Since the acquisition of the majority position by Cornerstone, Barita has paid a dividend each of the years. It is my expectation that we will continue along that trend, as long as it is prudent to do so. So, of course, as it is with every decision on declaring a dividend, there is significant work and effort that goes into making sure that the expenditure is prudent and that it will maintain the integrity, the financial integrity of the organization. I think I can only say go that far in terms of a commitment, because we're not, we will have to go through the usual due diligence process before we can make the final declaration.
Thank you, Mr. Chairman. The next question is from David Rose. Why did Barita Investments inject $2 billion in new share capital into Barita Unit Trust Company, which has a 30% drop in profit for 2023 financial year?
So I think I'll take that one, being in a good seat to comment on both entities, right? So Barita Unit Trust Management Company Limited is a licensed securities dealer, separate and apart from the Barita Investments Limited entity that the public faces and knows, right? So what was done before us and what we have sought to do further, right, is that there is a bifurcation almost of the asset management side of Barita's operations through BUTM, right? Or at least there is a clear path to it. So Barita Unit Trust Management Company, as the name very clearly suggests, is the manager of the unit trust funds that Barita offers to its clients, right? So what we sought to do during the 2023 financial year is to create a platform for there to be greater utility of BUTM's license, right? And specifically, what is intended is for an expanded asset management focused business strategy, hence the increased capacity provided by the additional capital, right? So this entity is not in and of itself the public entity, right? But it's been set up for expansion that will redound to the benefit of the broader Barita group, being BUTM and Barita Investments Limited itself. So that was really the reason for the increase in the share capital during the year.
Thank you, Ramon. Thank you, Ramon. The next question is from David Rose. How many staff did Barita lay off in Q1 2023, October to December? What was the attributed cost, and how has this impacted cost reductions?
So I'll take that one. So let me set the context, right, and then answer the question. You know, as I would have mentioned in my presentation and in both the writings that have come out from the company and our previous investor briefings, one key element of our strategy, particularly in the context of the current environment, is a pursuit of efficiency, right? And that brings with it these kinds of things where we have to optimize our talent portfolio, right? And consequently, we would have seen round about 10% adjustment to our workforce during the period that was described in the question, right? Now, this is set in the context of this happening globally, right? Companies both within our sector and outside of our sector, in the face of a sharp rise in inflation, a sharp rise in interest rates, have sought to see how they can do more with the same or more with less resources across the board, both people and non-people resources, right? Our situation is particularly unique, however, as we are preparing for the integration that will necessarily come with our transition on a financial holding company structure, right? And with that, it will bring opportunities, or have brought opportunities, for us to consolidate certain functions under common leadership or under, one team, under one group, right? So I'd say that was a primary driver of the efficiency exercise, and that was complemented by the environment that we're operating in, right? Now, with respect to the outlook, certainly it's our expectation that we will see lower expenses associated with that line in the immediate term. We've already started to see that in recent quarters, but I won't quantify it here, because of course the talent portfolio is dynamic, right? So even as we have gone through this efficiency exercise, there are still areas where we're seeking to add to drive business development and to enhance risk management controls, etc.
Thank you, Ramon. The next question relates to annual general meetings. David Rose has asked, when will Barita go back to hosting in-person or hybrid AGMs, as this dispensation is very constrained in engagement? A quarterly earnings call doesn't help either.
If I could take that one. Just yesterday when we were doing the dry run for this event, I brought that up with the team, and my was equal that we should be able to go back to face-to-face AGMs by next year.
Thanks for that, Mr. Chairman. The next question is from David Rose. He has asked, will MJR begin to develop some of its real estate holdings soon, or is there a shortfall in sourcing funding? I recall the Eden Gardens property should have been the HQ for Barita and Cornerstone. Any update on when that project might start?
So I'll take that. So I think I've largely answered that question, but I do want to take the point refunding. So that's another area where we'll be, or where we have been seeking out partnerships, right? So the fact of the matter is that Barita is well set up to fund these developments, right? But there are elements of the funding stack that are certainly better provided by other more specialized institutions, right, that focus on development funding and so on. Right? So as part of the curation of our partnership pool, financiers are also squarely in that pool, and we have been doing the necessaries to fill out all elements necessary to bring these projects to fruition. So to answer the question directly, no, there is no shortage of financing available for the build out of these projects. The main drivers of timing will really be demand studies, looking at the market environment. With these kind of things, my experience is that it's not so much exactly what you build, so much as when you build, right? So market timing is going to be important.
Thank you, Ramon. There is another question from David Rose. Cornerstone began the process to reorganize its financial subsidiaries into a financial group in December 2023. Is there any update on where that process has reached, when the Barita AGM should be held, and if the BOJ has approved the Barita Financial Group as a licensed financial holding company? Mr. Chairman, I will take that question. So the reorganization process involves a number of steps, including the filing of applications for an interim order. This application was filed in December 15, 2023, when we filed the relevant court documents. The first court hearing was held on February 20th, 2024, when the court issued an order for the convening of shareholders' meetings, where Barita shareholders will be asked to vote on the schemes. We're currently making the necessary preparations with respect to the holding of this meeting, and once the arrangements have been made, shareholders will be advised via, for example, a press release. In terms of timing, once the shareholders have voted on the scheme, we will need to return to court to seek a final court order approving the schemes. Given the number of steps involved in the process, some of which are outside of our control, we unfortunately cannot say definitively when we'll be able to secure the relevant court dates, but we will say that we're making every effort to finalize the reorg as soon as possible. And we'll, of course, keep our shareholders updated with respect to this matter. I believe the last part of the question was as it relates to the BOJ approval. We'd like to highlight that this is a two-part process, and the reorganization will need to be completed first before the BOJ will consider issuing the financial holding company license. I believe that addresses that question, so we can move to the next. The next question is, again, from David Rose. I believe this may be his last question because we do have approximately 2 more minutes left in this segment. His question is, once again, can the company show its interest income and interest expenses in the quarterly reports before the Cornerstone CFO comments again? I, as a shareholder, or even as a member of the public, should not be having to do additional work to calculate the interest income and interest expense. NII doesn't reflect the reality for the whole numbers. Stephen, if you could take this one, please.
Yes, certainly.
Thank you.
So I thank Mr. Rose for his question. I think maybe we're not the only ones showing resilience. I know this has come up a few times now. But the information, as I stated before, is clear in the statement of cash flows. There's no calculation to be done. There's a single line item that has the income side and a single line item that has the expense side. So as far as we're concerned, we are giving the disclosure. We're not giving it in any way that requires further calculation, and we have no intent at this time to change the way that we're disclosing it.
Thank you, Stephen. The next question is from Al Edwards. He has asked, given Barita's capital strength, do you envision going into M&A opportunities? Ramon, will you be able to take that one?
Sure. I don't know whether the answer is going to be satisfactory to Mr. Edwards, because I will have to answer in a general way. So what I'd say is this. There are 2 things that I'd say in response to that. One is that our group, Cornerstone, was born out of acquisition, right? Cornerstone would have acquired Cornerstone Trust and Merchant Bank in 2016 and then Barita in 2018. So you can appreciate that the overarching strategy of the group does have acquisition at the center of it. That being said, a big part of making the group more capable from a financial perspective, from a human capital perspective, is to allow us to scale. Right? And we have done a lot of work over the last 5, almost 6 years to scale organically. you'd have seen a significant rise in several metrics, right? And therefore, capital is one aspect of capacity for scale. We think we have strong human capital as well, and so on. So we're very capable, that being said, to grow both organically and inorganically. And naturally, as these things go, they're opportunistic in nature. So the most I can say is that we are generally open to continued growth, given how the business is positioned.
Thank you, Ramon. Unfortunately, we only have time for one more question, so I will raise it. Kevin Waite asks, considering that Cornerstone is the main shareholder, is there any plan or upcoming resolution for any name change within the group? And that will be the final question.
I suppose it's not very clear who would take that I'd comment. So, I think with respect to, well, let me comment on Barita, right? So Barita has been around this is our 46th AGM, right? And I'd say that we have a very strong brand presence in Jamaica and the Caribbean, right? And that I think is one key aspect of our identity, right? Now that being said, as these things go in terms of branding and name change and positioning, it's always important for any of that to be done in a structured way. So I suppose from a group perspective, any disclosures there will be made at the appropriate time. I will say that it has been made public that the financial holding company is intended to be named the Barita Financial Group. So that I think is probably new information from this platform. So I can share that. I hope that helps to satisfy the question asked.
Thank you, Ramon. That does in fact satisfy it. Okay, unfortunately, we do have a few more questions in the e-platform, but the allotted time has come to an end. So for shareholders whose questions have not been answered during the allotted time, please note we'll make every effort to answer your questions within the next 10 working days of the annual general meeting, provided we have your email address. So we'd like to thank shareholders for their active participation and the panelists for their robust answers, and we can now move to the business of the meeting, Mr. Chairman.
Thank you, Madam Secretary. I will now proceed with the ordinary business of the annual general meeting as outlined in the notice of the AGM. May I now ask a shareholder to propose the following resolution to receive and consider the director's report and financial statements for the year ended September 30th, 2023, and the report of the auditors thereon after it has been read by the secretary.
That the audited accounts, together with the reports of the directors and the auditors circulated with the notice convening the meeting, be and are hereby adopted.
Will a shareholder please propose the motion? Thank you, Dean. May I now ask a shareholder to second the motion? Thank you, Mr. Chambers. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. May I now ask a shareholder to propose the following resolution to approve and ratify the interim dividend payments and declare them final after it has been read by the Secretary.
That the interim dividends of $2.48 paid on November 18, 2022 be treated on the recommendation of directors as the final dividends for the financial year ended September 30th, 2023.
Will a shareholder please propose the motion? Thank you, Ms. Wallace. May I now ask a shareholder to second the motion? Thank you, Mr. Chambers. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. We now turn to the re-election of directors. Article 93 of the Articles of Incorporation provides that 1/3 of the board of its, or if the number of directors is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are Messrs. James Godfrey, Jason Chambers, and Philip Lee, who being eligible offer themselves for re-election. May I now ask a shareholder to propose the following resolution to retire and appoint directors under Article 93 of the Articles of Incorporation after it has been read by the Secretary.
That Director James Godfrey, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you, Dean. May I now ask a shareholder to second this motion? Thank you, Melinda. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. We now move to the next resolution. Madam Secretary.
Thank you, Mr. Chairman. That Director Jason Chambers, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you, Mr. Broadbent. May I ask now that a shareholder to second the motion? Thank you, Ms. Wallace. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. We now move to the next resolution. Madam Secretary.
That Director Philip Lee, who retires by rotation and being eligible for re-election, be and is hereby re-elected a director of the company.
Will a shareholder please propose the motion? Thank you, Mr. Chambers. May I now ask a shareholder to second the motion? Thank you, Mr. Broadbent. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. May I now ask a shareholder to propose the following resolution to appoint auditors and authorize the directors to fix the remuneration of the auditors after it has been read by the secretary.
That BDO Jamaica, having agreed to continue to serve as auditors, be and are hereby appointed auditors of Barita Investments Limited to hold office until the next annual general meeting at a remuneration to be fixed by the directors of the company.
Will a shareholder please propose the motion? Thank you, Melinda. May I now ask a shareholder to second this motion? Thank you, Dean. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. May I now ask a shareholder to propose the following resolution to approve and ratify the remuneration for the directors for the year ended September 30th, 2023, after it has been read by the secretary.
That the amount included in the audited accounts of the company for the year ended September 30th, 2023, as remuneration for their services as directors be and is hereby approved.
Will a shareholder please propose the motion? Thank you, Dean. May I now ask a shareholder to second the motion? Thank you, Jason. Shareholders, please now register your votes in the e-platform. You have 2 minutes to do so. Following tallying of the votes relating to this resolution, shareholders have voted in favor of the resolution. I therefore declare the resolution carried. Ladies and gentlemen, we have reached the end of today's meeting. As you would have heard from the various presentations and discussions today, challenges abound, but your company not only continues to ably navigate them, but management continues to be very discerning in managing the various risks, resources, and affairs of the company in general, with the objective of optimizing the profitability of the company for your benefit. We want to thank you for your continued trust and confidence in the directors and management team, which we do not take lightly. Finally, we understand that there may have been questions submitted that we were unable to address within the allotted time. For those shareholders who have asked unanswered questions and have provided us with their email addresses, we want to assure you that we'll make every effort to provide you with direct responses within 10 working days. We extend our gratitude to all of you for attending this meeting. We urge you to continue to prioritize the safety and well-being of yourselves and your families. Again, thank you for your participation, and we appreciate your continued support. Have a good day.